Kathleen, of course, we have a big inflation problem, but the economy still under pressure.
Absolutely, and this is why a lot of people think this is going to be the last rate hike of the cycle. We shall see, because at this point, inflation is still running about double the target, and something that is obviously the reason why Governor Yi and his team have decided it's worth moving again. At the same time, though, we just saw a couple of days ago the latest unemployment figures, a jump to 3.3% from 2.9. So you can see the forces pushing against the Korean economy are hitting the labor market. And it's true that Bank of Korea, as you can see from the chart, was ahead of its time. It started raising rates and even doing 50 basis point hikes, for example, long before the Fed did. But even so, their inflation rate has continued to climb. But they now have another recent report showing their year-over-year 20 days of the month exports were down 8.8%. And of course, you can attribute that a lot to the slowdown in China. Maybe that will turn around, but that's been something weighing on their economy. House prices are falling. They were another market where prices went way up. It was another reason why the Bank of Korea felt that it had to move to start cooling that off. Well, they've cooled it off a lot now. And the question is this going to be the last one? Or when they get further down the road, will they decide they have to move again? One more thing for them to consider, of course, is the Federal Reserve is still on a rate hiking path, although the other big story we're talking about today, or one of the others, is the consumer price index continuing to cool off, maybe not quite enough for the Fed to stop hiking rates. But as you know, Heidi, the discussion now is inflation cooled off enough? Is the Fed close enough to its terminal rate that it can slow down to 25 basis point rate hikes? It'll be interesting to see what Governor Yi says at the press conference. Will be starting in the next hour or so, because he will presumably get asked questions about that too, the link between the pressures on Korea's economy, the bond yields that rose, and all the other things. And of course, that was another factor for them to consider when they were thinking about this rate hike. Is in November, the sort of credit meltdown that occurred based kind of around these financing that went to build a Legoland Korea in the area just east and south of Seoul. So many things on the table. We'll get a lot more information, more statements put out by the Bank of Korea, but also more answers from Governor Yi to all these questions.
Yeah, it's interesting looking at the bond futures reaction, right? Just a small step lower, pairing those earlier gains, but shows perhaps there were at least a part of the market that were expecting a pause today. We, of course, get the press conference. What are you going to be watching out for? Because is the question going to be if we hear language that leaves the door ajar? I think that's absolutely what it is, because given the cooling off of the economy we've seen, it's easy for me to say, it's easy for Governor Yi to say yes, to give the signal that we think this could be the last one. But with inflation still high, and since there's uncertainty around the Federal Reserve and your own currency, do you want to make a definitive statement? So he had already signaled that for example, when they didn't do 50, they backed away from 50 hikes down to 25. Now many people assume that this is the last one, and I think that's probably the main question. But I'm also interested to hear again how much the Fed may be shifting a bit is helping them, how much China's rebound, which may come from this reopening, how that will affect Korea. These are all very timely questions. I think everybody will be waiting to hear the answers.